All right, good morning, good afternoon, good evening, wherever it is that you are watching this. Welcome to Question Time. It is the 14th of July 2021. Very, very excited to be coming to you. Yes, this is a different background. Yes, I don't have a TV today. So if you haven't already guessed it, I am on vacation.
I'm on vacation every single day because I love my occupation.
Yeah, so it's a little bit different. I do always promise you every single week that we are live and that we will be here rain, hail or shine. So in keeping with that, of course, I am maintaining my promise. Hopefully on the screen you can see I've flicked up just the front page of the Australian Financial Review today, Wednesday the 14th. For those of you that didn't believe me that I'm recording this live, I am. So I don't think I did it. There it is. Obviously, I'd love to be joining you live today. Unfortunately, I'll be flying back to beautiful sunny Melbourne, right on the time that we should be having question time. So as much as I would love to be doing it live from the airplane seat, it's not practically possible, as well as I don't think the rest of the guests around there would enjoy me yelling at you too much. Now, it is very interesting here. I did run into a few people that are long-time listeners, and they did promise me they were going to get up early this morning to come and join me live. They are nowhere to be seen, but I do have a few people that have walked by on their morning exercise and have pulled up a chair. So guys, welcome. Thank you for joining us. Hopefully we should be live now on Facebook. So those of you that are joining us from Facebook, welcome. Yes, I am on vacation if you missed that funny intro, but I'm here. Unfortunately, no one out of the rest of your panel wanted to lead the opening discussion, which is okay. I don't mind doing this. I've taken a quick break and I think the guys are still live. They are there in the office. They will be taking your questions live, so don't all of a sudden log off worried that we won't be taking your questions. Get them going, and I know they'll do a fantastic job without me there, and I will be back live for everyone next week. So let's get stuck into everything. I'm just going to share my screen. Hopefully everyone can see that. So as I said, this is live question time, 14th of July. Now let's jump straight into it. What do we see this week and what were some of the major themes? A lot has been happening. Perhaps most of the news has been dominated by obviously the New South Wales lockdown or the mockdown, lockdown light that now became lockdown heavy. And of course, just last night, there was outrage from everyone in our home state here in Victoria when the federal government decided to support the New South Wales government when they failed to support the Victorian government. That's all great. Unfortunately, today is all about real estate, buying homes, selling homes, renting homes, home ownership journey. So that is it for the political talk. We won't talk about that anymore. So housing market, obviously I opened with that because how have we seen each of the housing markets through the pandemics? A lot of questions have come through about this, and I think everyone has been very, very surprised at how well the housing markets have gone. So we'll have a lot of chat about that. End of financial year, good time for investors to review their property portfolio. I'll tell you what, it doesn't need to be the end of the financial year. It is always a good time to review where you're going, what you're doing, including any properties you've currently got and how you can maximize their value. So I'd love to get some questions around that topic. Reserve Bank, they've confirmed again this month they are not moving interest rates. The forecast of 2024 before they start to rise is still seems to be what they're saying, albeit there is a bit of chat around that the economy is doing better. That was obviously before we've seen this New South Wales lockdown extend. I don't think it's having much of an impact as it is seen to be relatively short in the grand scheme of things. However, there are some other headwinds that I think most of you thinking about buying out there or that have bought or looking to sell should take note of. It's not just about interest rates, albeit that's been the primary driver of this current boom that we're in. So, of course, couldn't mention it without it. 30% gains were unheard of, even unspoken, unthought about, just over 12 months ago. But those that did predict them, pretty much are going to see the predictions come true. So whether that's dumb luck or that was that they understood the underlying drivers and demand, I'll leave up to you to decide. Love to hear some questions from you, everyone, about that. And lastly, I had to throw this in. Whilst I don't necessarily think this is the right place to go, was really, really interesting to see where the biggest gains have been made in the last 12 months. And it's pretty surprising, albeit I don't believe that's sustainable. But it is interesting just to have a look, and I think also to look at some of those underlying drivers and demands that are key to the Melbourne and Sydney housing market. All right, so that's this week's themes. Let's jump into, as always, what do we see last weekend with auction results? Still very, very strong. Sydney, I think, whilst there were, a ton of auctions pulled that would have otherwise been going ahead this weekend, they were only down to 600 odd auctions. I think it was still a fantastic result to see them in the 70s. Melbourne as well, obviously very, very strong. Seeing those high 70%, and the rest of the market doing very, very well as well. So, still see 76% clearance rate is a fantastic result, and I think everyone should be pretty happy with where things are tracking. Now, those of you that are long-time listeners will know that I always say, whilst auction results are great to see at a point in time, they are backward looking. So those of you that are still out there looking, or maybe you're not sure whether you should jump on, you always need to look at what we call leading indicators. Now, there's a ton of them out there, and today's session is really about helping you unlock all of that information so you can understand what you should be doing. However, perhaps one of the best and easiest leading indicators you can look at is realestate.com produce their buyer index and their rent index. Now, these are just a guide, so don't take them as gospel. They are obviously based on information and data collected by realestate.com just on their portal. They are the largest in the country, so it's a pretty good barometer as to what's going on. Now, I always like to have a look at these to see, what can we expect in the next 30 days, 60 days, 90 days, potentially even the next 6 months. And these, are a really good gauge to see where things are going. So if we have a look at the national one, you can see the lines here. This obviously goes from the start of 2020 all the way through to today. So you can obviously see with that lines tracking another sort of solid uptick. I think it was up about 3% on last week. So, I think we expected perhaps that to be a bit flatter or even tend down, as New South Wales, being the largest housing market just after Victoria, went into lockdown, but it appears that hasn't broken the trend. So really what we're seeing here is that there's a lot of people still out there looking for a place, taking those actions that realestate.com mean or believe mean that you're more engaged in the market. I think, as always, I've been mentioning to everyone that's been listening for a long time, this is probably, this last 6 months is the first time we've started to see that spread between the red line, which is apartments, and the blue line, which is freestanding houses. And that's really sort of highlighting the fact that at some point, everyone's budget gets constrained by these record high prices for freestanding homes. And so people are realizing that, and they're starting to look at a much more affordable and perhaps even a better located property, being an apartment, a medium density, townhouse, apartments, attached homes, whatever you want to call them, which is always, we are big proponents, are a fantastic option for the vast majority of people out there that want to live in those great suburbs but can't afford that large 600,000 square metre, 300 square metre, whatever it is, freestanding block of land with a home. Whilst that's great, those of you that are looking for that lifestyle will find this a fantastic option, and I think that is why we're seeing that in realestate.com's stats. So expect more from that over the next 6 to 12 months. All right, what are we seeing in our local market? Pretty much a very similar trend. Obviously a little bit more choppy with the individual lockdowns for just Victoria that occurred. Obviously seeing not as big a spread between the apartments and the freestanding houses line. Obviously, I think we've been talking a lot that Victoria is probably 6 to even 12 months behind the rest of the country due to that harsh, severe lockdown number 2 last year. So you can see that line starting to spread, and I think you're going to see pretty strong and solid growth continuing here in Victoria long after most of the other states have slowed down. All right, let's jump into the rental. This is obviously the same index produced by realestate.com, but just for what they're seeing in terms of rental demand. So really interesting here where we're seeing these stats. Very hard to read into them. If we look at the national one here in a little bit more detail, there's a huge spike at the start of the year, and then it's remained relatively flat. I don't really know how much to read into this. It's obviously a bit of a guide. I think, it's very different around the markets. Those of you that follow national numbers will know that in the Gold Coast, they are having a huge boom. I think also in Perth is having a huge boom in rental prices, obviously due to the limited amount of rental properties that are available, and seeing great demand from there. Now, I think that in part is led obviously by the success during this pandemic of Perth, that pretty much it didn't stop at all. Likewise, the Gold Coast and those people thinking that they want to continue working from home. Now, whether that's a long-term structural change or it's just a short-term temporary change, only time will tell. Me personally, I believe it's just a short-term temporary change as everyone's excited about this, and then when as things start to normalise, they get back to the grindstone, they realise it's not necessarily practical for what they want to be doing or where they're going. However, interesting to note that there is still demand out there. If we jump into our local market here in Victoria, obviously slightly different. You can see a bit more of a spread between those two lines for attached apartments and townhouses versus freestanding homes. Again, I don't know how to read this index. It's perhaps less useful because, perhaps it's just people dreaming of a new place. Particularly, I can tell you firsthand, we are seeing that the length that tenants are spending in a particular home is getting shorter and shorter and shorter as those value or bargain hunters are finding a cheaper place, a better place, and moving and upgrading or downgrading as it may be. That obviously makes it very hard if you're a landlord, which is why we always talk about making sure when you've got a good tenant, do everything you can to retain them, because that vacancy period, plus the letting fees, plus everything you've got to go through, as well as potentially not getting the rent paid on time by your new tenant, is really not worth trying to squeeze those extra dollars. However, I want to pause for a moment and just tell you a story. Probably it's only the first time I've heard this from my guys on the ground that over the last few weeks, they've actually seen people now, perhaps they're getting enticed and coming to an open home for one of the cheapest apartments that we have available. And when they're chatting with my guys on the ground in that open home, what else have you got? And the guys are showing them some of the newer apartments, larger apartments. People are actually prepared, we're seeing, to take that step and pay a lot more for the right place. So what does that mean? Don't really know much other than, as always, a quality place should do better over the long run than a cheap and nasty place. Having said that, is that a change in the market? Who knows? But I think it really is interesting to see that slowly the bargain hunters are starting to become more realistic and practical, that perhaps prices have clearly bottomed out and the only way is up, and they're really looking to lock in a good quality place. So that's enough on rental. As always, those of you that are long-time listeners, I'd like to ask you a question first. I've run through some of the stats. We've talked about what we're going to do today. I'm going to wrap this up in the next minute or two. Then you're going to have the questions, which will run for probably 20-25 minutes, and then I'll do a closing. But before I get into that, I want to know from everyone out there, particularly those of you that have just joined for the first time, or perhaps some of you who haven't joined for a while and have forgotten, what is more important? Is it information or knowledge? So think about it. I've just given you a ton of information at the start of this, or is it knowledge? Just take a moment, think about it, point your finger on the screen as to which one you think is more important. All right, so the answer is knowledge. Now, if you didn't get that right, let me just unpack it for you for a moment and break that down. So information is organised data about something. So it could be those auction results. Knowledge, on the other hand, is an understanding about that information, either through education or experience. So, you know, if you have a think about what did I do at the start, I gave you the information, I put up the results, and then I interpreted them for you using my knowledge through both my experience and my education. To try to give you what does that mean for you. You know, as we ran through those leading indicators, you know, that was a great example of where had you just looked at the graph, it'd be very hard to necessarily understand what that means. I tried to break it down for you, give you some first-hand experience I'm feeling on the ground, as well as what I see meaning there. So, you know, today's session is all about creating knowledge for you out there, giving you that knowledge that we've got so that you can create your own database of actionable knowledge. Really, really important concept. I'm not going to dwell on it too long here because most of you I can see, I'm sure, I should say, because obviously this is pre-recorded this morning, are long-time listeners and you know what I'm talking about here. But it is all about creating your own database. So when you see those triggers or those events or certain things occurring, you know what action you should be taking. Whether that means you should be jumping in and buying at your next property. Should you be upgrading? Should you be looking to sell? You know, should you be increasing your rent? Whatever it is that you are in your home buying journey, it doesn't matter where you are. We're all about helping you on that home ownership journey. So that is the most important thing I can, you know, implore on all of you to think about is creating knowledge. You know, don't just read the information. A ton of it is totally useless, either because it's not relevant to you or it's written by a totally fictitious source, making up complete rubbish. There is a ton of great information out there, fantastic commentators, fantastic journalists, but you need to know how to break down that information and turn it into knowledge so it is useful for you. All right, so I've been going on for a while now. Who am I? My name is James Maitland. I'm the General Manager here at Salvo. I've helped create more than 11,000 homes for people like everyone on the line today. Those of you that are wondering who is Salvo, if you don't know who we are, I'll have to do a whole nother session for hours to run through everything that we do. Suffice to say, we've got a ton of different businesses, but ultimately what we're all about across every business is helping create homes for people like you. So it doesn't matter where you are on that journey, everything we do is about helping create your own home. You know, it doesn't matter whether you're an investor, a first home buyer, or a long-time owner or a long-term investor, even just a renter moving out of mum and dad's home for the first time, we can help you wherever you are on that journey. Joined today on the panel, ton of great guys. So I've got Greg Arbeck, Jack Jan and Lucas Karras. These guys are live in our office ready to take your questions. So very, very excited to see how they go solo today. For those of you that were looking forward to me being the MC on the questions, I apologise for not being able to do it. As I mentioned at the top of the show, if you did miss my opening, I am on a plane right now, so I recorded this a few hours ago. It is obviously still a live session. The Q&A that you've been looking forward to most is about to start. All right, so those of you that haven't done this before, how do you ask a question? Really, really simple. There's two methods you can do. Those of you that are brave, you can raise your hand, we'll unmute you and you can ask your question live. Guys, good luck running the technology because I know it takes a ton of skill because I do it every week. Just joking, it's really, really easy. Perhaps the most preferred method that everyone loves doing is dropping their question in the Q&A. Everyone will be reading through those and answering those questions live. If the guys don't get a chance to answer all of your questions, we will run through the transcript after this session is finished and try and get back to you with an answer or a time to catch up and run through in more detail. So look, jump in, start asking those questions now. It has been a pleasure recording this for you now. I know the guys are going to do a fantastic job, so cut them a bit of slack if they're not as well oiled. I know they'll get all of that information dispersed into knowledge for you so that you'll know what you're doing. And I look forward to seeing you guys live again from our office next Wednesday.
Okay, everybody. Well, thank you, James. It just shows the commitment we have made to you. As we've said, we will be here Wednesday, 2:30, come rain, hail, or shine, we are here. Whether we're sitting in a jet plane, whatever it is, we make sure that we're here. So those who are on the call, are just looking at some of the people I can see, call out a few names, Yvette, see another James. Okay, not that James, but that James. Peter, Courtney, welcome. Very pleased to see you all here. So again, just thank you, James, for that introduction. Saved a lot of thing what you do for us. Just having a look at some of the questions here, because I'll be looking at that and sort of relating to some of the topics of this week. One of the key things, as James mentioned, was the lockdowns in Sydney and stuff like that. We keep on thinking that Rona is something of the past, but it keeps on popping up its ugly head. The question here really is, and it's relating to some of the stuff, what effect is Corona having on us, or what effect has it had on us, and what do we see in the future? Can someone give us some indication on that question?
Sure, Gregory. I'll look. Corona keeps on changing, and we get new variants all the time. So now we're dealing with the Delta variant, which they think it's, according to everything, it's pretty nasty, and it's sweeping around the world. And unfortunately, it has hit Australia as well. As we all aware, Sydney is entering the third week of lockdown, and it looks like it's going to be extended for a little bit more. Vaccination rate is still low. Vaccines distribution is slow, and sort of temporary or snap lockdowns, as we call them, set to become the trend, set to be for the rest of 2021. Now, we've been doing this already for about 15 months with Corona. People don't realize how much time has gone by. And we have seen some of the trends that have come out of those 15 months. And I will share some information with you and for our listeners. So first of all, the auction results, despite everything we're going through, they still remain resilient. Although we have noticed that larger than usual auctions are either withdrawn, postponed, or sold prior to auction. So Sydney is now sitting around 70%, and Melbourne is reaching pre-COVID results of 75.9%. So we're still seeing amazing results here. Now, the other factor that seems to be sort of impacted is the transaction activity, buying, selling. So, obviously it is down, but we have seen that it quickly catches up as soon as restrictions ease. We saw sales drop by 33.9% between March and April 2020, and that's in with 2 lockdowns that we had. But also listings fell by 44.7%. So we see that there's a balance there. But then we saw that property values have remained resilient. As soon as the restrictions eased, statistics shown us that for the financial year that just ended, 2020-2021, we saw approximately 583,000 transactions. Jeez. That's much higher than the decade average of 455,000. And it's the highest volume recorded since February 2004. It's important here to note that every single capital city had an increase in the housing market of up to 21.4%.
Jeez.
So amazing figures.
Absolutely. Now, talk just based on that. We sort of had some forecasts and stuff. And has anybody got some opinions on what we can potentially see? What are people saying? What are people saying? What's going to happen further? I think, Jack, you and I were talking about that as well.
Yes, Greg. And the people, and not the normal people, they're all from the expert and also from the bank. It's a big organization. Generally speaking, they will forecast that the house price will increase between 25 to 30% in the next 3 years.
Jeez.
That's very, very good.
Well, that's pretty amazing. I think what other people are saying, well, on the back of that, what is the RBA saying and stuff like that? Maybe I can help with that as well. We still see that the cash rate is sitting at 0.1%. So I think that you've also looked at some of the stuff, the things that could affect that. what we're looking at is what could stop that. I think is what, if I can answer that question, would be if right now the RBA is not that concerned, because we're still not getting a consistent rise in inflation. So the only other things that could potentially slow things down, I think, would be a tightening of credit and interest rates rising, which looks unlikely. I don't know if you've got some of the stuff. Any thoughts on that as well, Jack?
Yes. Since you mentioned, because the RBA has confirmed the lower cash rate, 0.1%, to keep that level until 2024. So, which means in the next 3 years, it's unlikely to say the interest rate will goes up. The potential risk might be, like we said, it's the inflation rate. Once the inflation rate goes up, maybe increase the interest rate, and also the unemployment rate. If the higher unemployment rate, maybe also leading the increase rate goes up. But those potential risks for now, and the government, the RBA, they will confirm is very unlikely happening because we're gonna have like very strong economic recovery before the interest rate can be increased.
Yeah, I've had a question here, and I think I could probably answer that as well. They say we have seen quite strong inflation, and the question was, isn't that going to affect things straight away? If I can sort of elaborate on that, really what the RBA is looking at, they want to see a sustained increase where it gets above the level. So they're trying to keep it around the 2 to 3%, but on a sustained basis. So if it's not doing that on a regular, and it's increasing that, they're still going to keep that at the lower levels that we've seen. So even though there are some short-term things, so just elaborating what Jack was saying, some short-term fluctuations, until there's absolutely a sustained level of what we might deem hyperinflation, it's unlikely that the market's going to change much. Thanks, Jack. So just on that, we've also, last week we spoke end of financial year. We keep on, we sort of back there. And as what James mentioned as well, end of financial year, new year, it's never the wrong time to actually review your portfolio. And we usually have Lucas, who's our tipster, but this time I was the tipster last week. It's now Jack's turn to give us some advice on what should investors be doing to review their property portfolios for now and on a regular basis, Jack.
Yes. Thank you, Greg, giving me a chance to let me to give the tips. And today is I think it's the 14th of the July. Everybody now is preparing to lodge the tax return. So same as me, I'm gonna doing that. But it's also very important and to review your investment property portfolio. So that's the, generally speaking, my tips will give to every single investor if they own the investment property here. So every financial year is gonna be the timing to have a look what is your rental return of your investment property. However, we all know the property investing is a long-term investment, but it's also very important to have a look your investment property or rental return. That your investment property give you the good cash flow, the positive, the rental income, which is also important for the investor to keep your investment property easily. Basically speaking, there are three facts to give you the good rental yield. First of all, location. Yep. Second, the type of your property, is that your unit or the house? Generally speaking, the unit, the apartment will generate a higher rental yield than the house. The third is we're going to have a look the demand supply on the market. For example, if the city apartment, we have a lots of the overseas students, once they're coming back, but we're short of the stock, will result the higher rental. So for the property investor, they're gonna have a look 3-factor of your investment property. Then you're gonna individually have a look how much you have on your the return of the income of the rental return from your investment property. Generally speaking, if your investment property can have the gross rental return about 4.75%, that's rental yield, most likely you will have the positive the cash flow. So this is very important. Also, another tips for the investor, looking some property, maybe give you a secure, guaranteed the gross rental return. That's probably a good idea.
And when you were talking about that, it's very important that you deal with a reputable company who's offering a rental guarantee, i.e. shamelessly plugging Salvo Property Group. Yeah, let's move on. So
absolutely.
Just while we're talking about rental returns, we just wondering, I think Lucas, you were saying there's where have we been getting the best returns? Generally speaking, we seem to have it's going quite well, but what's happening across the nation?
Look, apartments in Darwin have skyrocketed, huge return of about 7.4% for investors. And I mean, in Darwin, it is the cheapest sort of city. And people now being able to work remotely, taking advantage of sort of the good weather there. And also, once the market opens up, the proximity to Asia, they're the closest sort of place from Australia to get to Asia. Then you got places following closely like Perth. Because Perth, you've had a lot of the mining. They used to fly in, fly out, but now with so many lockdowns happening, a lot of people are staying there longer term due to work. So they sort of seem very good returns. You know, again, this seems to be a short-term thing because once there's no longer pandemic, things will get back to normal. Now, talking about the two biggest markets, which is Sydney and Melbourne, we've seen Sydney apartments return of 3.55%. and Melbourne slightly higher, 3.95%. But this is very important. We need to understand why this is happening. It's not just due to COVID and the restrictions and everything, but it's also because the house prices in Melbourne and Sydney are rising far more quickly than rents. So of course, when the prices increase up to 30%, as we mentioned, Gregory, it's very hard for the rental market to keep up.
So if we sort of analyze that, when you look at the ratio of what the property's worth to the rental return you're getting, it looks like a huge discrepancy, but it's more about the value of the property relative to the rental that you're getting, which might be close to what you were getting, but because the property value's increased, it appears lower. Okay.
Correct. So you know, Melbourne has now all of a sudden become one of the two cheapest cities to rent, with approximate rentals of about $430 per week, which is exactly the same price as it was back in 2015. However, we have recently seen the availability has had a very sharp drop, which means people are moving back into the city and things are getting back to normal.
And in your opinion, Lucas, when it's not if, because I'm always positive, when the borders reopen and the students come back, I think we're going to see the two capital cities, that growth being a lot better and substantial.
100% right, Gregory. And I think, like you said, it's not a matter of if, but when. Yeah. And once it does happens, we will see definitely huge jumps in the rentals for both of those cities, Sydney and Melbourne.
Well, thank you, gentlemen. I see we've just gone a few minutes over time. What I'd like to do, luckily for us, James has also pre-recorded a ending for us. So if we can just cut back to James and let us give us the final word. Thank you.
All right, everyone. So how good was that? I knew the guys had it within them to be able to do a great session. Now I know that they're going to be starting to think, what do they need me for anymore? But guys, don't get too excited. I will be back next week. All right, so I obviously just want to make a few quick closing comments here. I know that most of you have got things that you want to get to. I won't hold you up for long, but I really want to sort of, sum it up. Today's session was great, and I know a lot of you are thinking about switching off now, but please don't. Just I'm only going to go for 2 minutes, and I really want you to think about this concept. We talked today at the start all about knowledge and how important that is. And, what I want to know is that for most of you, you're probably going to do nothing about what we've done today. You're not going to change anything. You're going to say that was great, but you're probably going to continue on with what you've been doing for the last 12, 18, 24, even 10 years, going on and on with the same method. But I just want to put this to you. If you don't make a change, don't expect a different result. So, if you are looking to upgrade your home and you're not going to change anything, then don't expect to magically find that perfect home drop into your lap. What I really, really hope as a bare minimum that everyone on today's call does is think about what we've talked about today. Think about the knowledge that you learned from today's session. Think about the concepts that I went through, and try and go out there and do that yourself. Employ those tactics, think about that knowledge, and go and make those changes so that you move forward on your home ownership journey. I'd love to hear back from you how you guys are going. So feel free to drop a line, give us a comment wherever it is. Love to hear how you guys are going. But what I really, really hope that you do is do it with us. Now, that can involve many, many different ways. As I said, we've got a ton of different businesses, all aimed at helping you along that home ownership journey. So where can we help you, and at what step could we be useful for you? I'll tell you, we'll be useful at every single step. So I'd really, really love for everyone to get in contact with us, have a chat about where they are, and let's see if we can help you. Now, I can't help everyone, but I think that the best next step that everyone on today's call can do is, let's catch up for a one-on-one. Today's great, but we don't get a chance to run through your personal circumstances. So what I've done to enable that is I've set aside time in everyone's diary over the next 5 days, specifically blocked only for these appointments. And I'd love you to jump on now, book one of these sessions, because I personally believe, and I know that you will agree after you do this, this is the smallest investment that you can possibly make into your future and still have a realistic chance of actually getting something out of it. So what does this involve? Well, it's really, really simple. It's probably a 15, maybe at most 20-minute catch-up. It can be over the phone, it can be face-to-face if you're based in Melbourne. We can do it over WhatsApp, FaceTime, Zoom, however you prefer to catch up. And really all it's about is getting to know a little bit more about you. You can ask us some questions, a bit more about the market. We'd love to know where you are. What are your struggles? What are your hurdles? Even if you don't think you've got any, we'd love to just have a chat with you to understand where you are and what you're doing. And ultimately, so we can get a good understanding as to where you might want to go, how we can help you. And look, we can't help everyone. That's the reality. I'd be lying if I said every single person out there we can help. So I'd love to see if you're a good fit for us. So who is it for? If you're wondering, well, is that even really worth me taking my time? Everyone who is on this call is a good fit for us. I guarantee you, if you've spent the time, you've listened to what we've gone through, we will be able to help you wherever you are on that journey. But ultimately, where you're going to get the most value is you've got to be motivated, prepared to take action, really get through the work, understand that concept about creating knowledge and actionable knowledge, and be prepared to do it. You've got to be prepared to roll up your sleeves, get in, do the hard work. Now, by hard work, it's not a lot. The idea of partnering with someone like us is for us to be able to help you along that journey and do a lot of the heavy lifting. But you've got to be prepared to make the action, take all of those steps that we tell you to do, and get involved if you really want to see realistic results. So jump on now, grab one of those spots if you're still thinking about it. Don't let them disappear in your preferred time. How do you do it? For those of you that I can see, probably wondering how would I do it? Really, really simple. There's 3 ways to do it. The first is jump into the chat. Those of you that are live on Zoom, obviously this only applies to, and there'll be a link there. Where you first launched your web browser to join this Zoom session, it should be rediverted to the booking page, so you can jump on there. For those of you that don't have your diaries with you or are a bit uncertain as to what time you want to do, or you've got to jump off the line now, that's okay. I will send you a follow-up email with a link that you can go and book those at any time. I do just want to say, make sure if you do want to take up this offer, do it now or do it, tonight, because they do fill up quickly, and we can't help everyone. We will make this offer again next week if you do miss out. So join us again if you do not have your preferred time, or just give us a buzz and we'll try and fit you in wherever we can. But as I said at the start, this is the smallest investment you can possibly make and still have a realistic expectation of achieving proper, realistic results. So that is it. I told you it'd be short, sharp and sweet at the end. I hope you've enjoyed today's session. I very, very much appreciate all of you tuning in. As I said, I apologize for not being able to be there live today. Hopefully my plane is just about to land and I'd love to see how the session went. Feel free to give us any feedback. And I know that the guys would have done a fantastic job. I will be back next week live as always, so please do tune in. Wherever you're from, or whether you're a regular or it's your first time, I thank you very, very much for spending the last 30 minutes with us. I do appreciate it, as does everyone here. And we really hope to see you again, whether that be through one of these one-on-one meetings, whether we just happen to see you on the street or you reach out to us, or feel free to join us. We do this question time every single week. As I said, it doesn't matter where we are in the country or even in the world. We will do this live every single Wednesday, 2:30 Australian Eastern Daylight Saving Time here in Melbourne, rain, hail or shine. So I look forward to seeing you either next week, next month, next quarter, next year, whenever it is. And thank you again for joining us.